welcome to another episode of Fintech Focus TV with me, Toby. Today, we're over in Ireland speaking to Ian Duffy from Accelerated Payments. Ian, how are you?
Good, Toby. How are you keeping?
Really good, thank you. Really good. How's things over there?
Good. Well, pretty similar to the UK and most countries in Europe and around the world. We're in a cycle of lockdown and unlockdown. So I think we're all trying to stumble through Christmas and pretend it's normal and make it as normal as possible when that's going to be very difficult. But as you know, it's great to see the vaccine being introduced, and I think that's kind of giving us all hope that we're getting to the beginning of the end, albeit it will take another 8 months. I think that's lifting people around the globe. Exactly.
Fingers crossed. Yeah, it was a good bit of news today, and it's nice to see those sort of images coming through and
correct
various paraphernalia that we saw in the press alongside it as well. So yeah, feel good as we sweep towards Christmas. Ian, I want to talk a little bit about, well, there's loads of things that we want to cover today, but before we get into that and go through your sort of specialist subject of expertise in terms of funding of the SME space, which I think is a really interesting time at the moment. Give us a little bit of background about yourself and Accelerated Payments and the journey so far.
Sure. So I've been involved in startup businesses for 25, 30 years. You know, I've been into businesses, so have been involved in the SME sector through most of my working life. And Accelerated Payments is going just over 3 years. We started in September 2017. Actually, it's a good story as to why we started the company. One of the companies I am still chairman of in 2015 got a very large check from a buyer in July 2015. It was a chunky check for about $1.5 million US. And we went to the local bank to cash the check and asked 2 questions. How long to cash the check? Because we needed the money, obviously. And if it's longer than 24 hours, can we have an advance? And this was a very, very large retailer, a global brand. And the answer was 6 weeks to cash the check. And no, you can't have an advance. So I just thought, wow, that's crazy. That just doesn't make any sense. Effectively, we had an IOU in our hands, from this company that they were going to spend, that they were happy to transfer $1.5 million, and we couldn't get an advance on it. So that's what Accelerated Payments does. It basically takes receivables from small companies that have been issued to medium to large companies who have a stronger credit risk profile. And we leverage that credit risk profile, and we're able to advance funds to small businesses that typically struggle with accessing funding because they're either new, or a significant amount of their revenue is export led, or they have a small number of clients, which banks traditionally don't like, or they've had a wobbly 12 or 18 months or 2 years, and that's particularly relevant this year with COVID. So that's our business. We fund small businesses that have good receivables, but don't have all the elements in terms of their own balance sheet strength and cash flows, and therefore can't attract funding.
So that's a really interesting sort of space, isn't it? Because if we look at SMEs being the sort of driving force, the powerhouse of the economy.
Yeah.
One of the sort of vice-like grips on the SME space is cash flow and funding, right?
Right.
And as you rightly say, that can be difficult to attain and retrieve at various different stages. And we've seen this time in particular, seeing an awful lot of stimulus and the sort of big movement of the C-bill scheme and the bounce back loans, et cetera, sort of paint a very interesting picture for today, where it's about retention and survival, through to tomorrow, which is about that debt and its looming payback, et cetera.
Yeah.
Whereupon the pressure, I imagine, this year on money coming in and fast payment would have been stretched beyond times that we haven't seen for decades. Tell me a little bit about what's happening in that, and what you've seen over the last 9 months or so, and what you anticipate over times to come.
Yeah, well, I think with COVID and Brexit have been the two conversations of topics, particularly in the UK. Actually, this phenomenon of CBILS and bounce back hasn't been discussed much. I mean, it's unprecedented in terms of a cash injection into the economy, in particular aimed at SMEs. I think it has had a very positive effect. I think the UK in particular have been quicker and stronger at getting funding into the SME sector. Actually, it's created an abundance of cash because, so it is an unusual anomaly. A lot of companies are holding cash at the moment. They've been able to accrue payments for VAT and PUA, PRSI. They've had these CBIL fundings and bounce back fundings. But actually the problem hasn't been fixed in the medium to long term because those businesses have still got to restart or get back into a normal growth phase. So I think what it's done is it has cushioned the effect of COVID very effectively. But I think next year is going to be a tough year for the SME sector as they wean themselves off this, massive capital injection. I mean, if you speak anecdotally to people in the banking world, they will say SMEs are showing, positive cash balances higher than they have been in a number of years. And it's one of the ironies of the current market. So I think CBILS and bounce back and similar schemes in the US and Canada and Ireland and all across Europe have been very prevalent. They have worked, I think, in terms of cushioning the effect from an economic perspective, which is very important. But there are going to be, it's creating a lagging effect on companies that are going to struggle, I think, in 2021. Hopefully it's a small group, but I think that history has yet to be written, and it will be interesting to see how that washes out in the first half of 2021.
Yeah, look, I think this is a really interesting scenario because this sort of growing time bomb where you talk there about the sort of increasing cash balances and the health of today and the stimulus of where it goes suddenly presents a problem, potentially a year, 2 years, 3 years down the line for a number of businesses. Are you anticipating that being the case? Do you see this as being a sort of a respite as opposed to anything else? And does this create further economic disasters further down the line? Are we actually far from the eye of the storm yet?
Well, so I think it is going to create some difficulties because as I said, the SME sector will need to wean itself off government intervention. I think it's going to create great opportunities, as they say, never waste a good crisis. So
absolutely,
I think for businesses in our space, in the SME funding space, I do think it's going to create an enormous opportunity for those that are flexible and agile enough to be able to provide services. I think the incumbent banks are still going to be focused on their own portfolios and trying to sort those out. And obviously there will be legacy issues there, just as there are in any portfolio. I think there will be opportunities for SME funders. The key issue for them will be what's the effect going to be of COVID on their books, and will they still be able to access cash from the wholesale debt markets in order to support the SME sector. So there's a lot of inputs here that have yet to be worked out and yet to evolve. So I think it's going to be an interesting year or two. But that said, I think the trend, all it will do is accelerate the trend. In my view, the medium to large banks are going to struggle more and more as primary funders into the SME sector, just because the efficiencies aren't there. They can't administer a 100,000 or 50,000 or a 200,000 loan facility, pounds, euros, dollars, doesn't matter, as efficiently as the alternative SME funding sector can. What would have done, I think it will have accelerated that trend. And then I think the larger banks will look for opportunities to partner with fintech companies like ourselves, rather than being the sole provider into that community. So it's a very interesting space. I think COVID is going to accelerate that transition significantly, and there will be winners and losers out of that. So it's going to be interesting.
Yeah, I think that's been a sort of I guess one of the core trends of the last few years, with large banks partnering and collaborating as opposed to sort of swallowing or competing with the threat. The same across all areas of the fintech space. First of all, it was disruption and challenges. Then it became sort of more adoption and engagement, I guess, into the whole process.
Yeah.
And I think that that sort of agility is one of the key things that you're talking about there, to make sure that there is that ability and option to to keep on driving value and providing the solutions to to the SMEs who actually need that flexibility, which I think will be one of the one of the core themes that we look at as well. You agree?
Yeah, I agree. And I think for banks, SME funding never particularly moved the dial, at the AGM in terms of enhanced profits. It was seen very much as almost like a CSR. They had a responsibility to support the SME sector. It was never, a major profit driver. They're rightly worried about the next generation of companies and putting themselves in prime position to be able to fund those businesses as they evolve and as they grow stronger and bigger. And then I think that's where the partnership model works well, where even in our own model, we have a partnership approach which allows us to sit alongside an existing bank, an existing relationship with an SME, and for us to be the primary funder without interfering with any other aspects of the non-credit services that banks can provide. And again, I just see that trend continuing, because we can and should be nimbler, we should be more cost efficient, and we should be able to focus a level of service at that SME that I think that the larger banks just struggle with. Yeah,
absolutely. And look, there's other challenges that we're navigating at the moment. COVID's obviously one of those which creates pressure across the system. But there's also and with that, as you say, there's rightly opportunities, and a big theme of this is positives and negatives, as we've been talking about all the way through this series. There's another sort of economic headwind and political headwind that's sort of blowing at the moment, with Boris currently on his way out, if not out in Brussels, ready to negotiate the next phase of the sort of crescendo of the never-ending Brexit negotiations at the moment. Right. Tell me a little bit about what that looks like and that's impact on this theme.
Well, I think on our business, it's going to have. I think it's going to again drive business. I think somebody summed it up well. For individual companies at a micro level, it is a tolerable inconvenience in that. The entrepreneurs of this world, whether they're British or Irish or French or German, will find ways through to maintain trading, but it is a significant inconvenience, and I suspect the first 2 or 3 months in particular will be quite wobbly. Thank goodness we live in an IT world where a lot of the administrative functions can be automated, which is going to help greatly. So I mean, as an Irishman in Ireland, it's going to have a massive impact on the Irish economy. UK is one of our key trading partners. So again, I don't know how all that's going to wash out, particularly for the agricultural sector. So it's very prevalent as an issue here. And then obviously with the borders between the Republic of Ireland and the North of Ireland. So I think we're all hoping for a deal. So that's in. I think a deal is in everybody's interest, because I think the shock.
It does seem that way, doesn't it?
Yeah, I think the shock. British entrepreneurs, Irish entrepreneurs, German entrepreneurs, American entrepreneurs don't need the shock of a no deal and trying to muddle the way through that. It's enough. There's enough complications in the world with COVID and a recession and everything else. So even if that leads on a control basis to, a more independent Great Britain, I think that's fine, but time just needs to evolve. And, this idea of there being, a cutoff point where we really don't know in a no deal scenario what that's even going to look like, I think it's just not good it's not good for anybody. So I think, look, I think the next couple of days will tell a lot. And then the next 3 or 6 months, I think there is going to be a significant amount of, can I say, inconvenience. But I think the entrepreneurs in all of the jurisdictions will battle through it and just see it as one more piece of adversary to deal with.
Absolutely. I think we've been used to that for a little while now. I'm going to come on to entrepreneurship in a minute, because I know that's a subject dear to your heart. But just staying on that sort of, the brinkmanship of Brexit and how that's everyone's interest, and the sort of challenges that presents. Look, you're right. There are things there where you deal with what's put in front of you, and there's natural concern around what happens and what that means. But as people have been, depending on which side of the Brexit fence you sit, there will always be arguments for the positives to come out of it, and the opportunities to come out of it there. Talk to me about opportunities, because like you say, within the whole funding bubble that we're looking at the moment, the potential tidal wave of paybacks that we've got, we're going to see economically in a couple of years. As you say, quite rightly, there's opportunities, but particularly in your space for people to adapt and provide better solutions for people who are looking to inject that growth.
Yes.
Or settle cash flow, which are the two principal areas of it.
Yeah.
Talk to me a little bit about the opportunities in Brexit and what you're seeing there.
Yeah, so I think the UK is our most important market for us as a business. It's about 80% of our business, and we expect it to continue that way. Really interesting, our portfolio, Toby, is currently about 50% in US dollars, and that is UK companies trading with US entities. And again, traditionally banks don't like cross-border. They don't like when assets are across the Atlantic or across the pond, because it's hard for a bank to get their head around that. That's our core business. So we have an operation in North America. We're based in Toronto. So we're on the ground in the US. We're on the ground in Canada. Both very important markets for the UK. And again, that's very much part of our strategy. And again, as the UK focuses on markets other than Europe, we think that there's great opportunity in that, and being able to move funds within the US market, account for US dollars and sterling, and being able to neutralize positions between those two currencies and pass that benefit on to our clients. So we're very much in the international space in terms of, and we see great opportunity ahead with Brexit as UK businesses expand their viewpoint and their markets of interest, beyond Europe. I mean, I think obviously Europe is going to continue to be a major trading partner, but I think there is a focus on markets beyond Europe, and I think we're well positioned to support and fund UK companies who are trading internationally.
You mentioned there the US, and obviously there's been some news over there of late with elections and such like.
Yes.
What impact does that have? Does that compound the issue, or does it?
Well, I think, look, we know in the US we have a very polarized community, which isn't good. I mean, for anybody to write off Republicans or Democrats as one being the villain and one being the angel is of course nonsense across 150 million people that voted. I think the new administration will bring stability. I think, and then again, the vaccine that it's now there, I'm expecting that the next, once we get through the next 6 months, I do think things will normalize. And I think the economy will have a good run for 18 months to 2 years, because there's a pent-up demand in the market. And I think the new administration will have a calming influence on the markets, and I think will be positive, from a European perspective as well as a US perspective. I mean, one of the interesting things is why we set up in Toronto, under the existing administration. visas were hard to get for the US market, and were much easier to get for Canada. So and Toronto, an hour and a half's drive from the border. So it's a great location. And it's interesting, again, with Brexit coming up, as to how these trends affect movement of companies, positioning of offices and resources in the long term, as the impact of these trends take effect. And as I said, the entrepreneurs will just move with the lines of least resistance. And so it'll be interesting to see the impact of that over the next 3, 4, or 5 years.
Absolutely. Yeah, I think we're set for some interesting times. And I agree. I share your optimism actually about the sort of bounce. And I love that sort of the pent up demand of the economy. We're seeing that. Look, our day job, as you know, is a recruitment business. And one of the things that's been really prevalent over the last 2-3 months or so has been a movement in sales teams who recognise that next year's quotas are there. The market is still breathing and living, and there's going to be a need to catch up on some of the sort of missed opportunity as buyers sort of come back into shape on that as well. Yeah. And I think there's a very, very interesting pattern that we'll see that with the right headwind can see some real positivity coming out of that over the course of the next few months. I want to go back to something you mentioned there about entrepreneurship. I know you, as you mentioned and alluded to before, the chairman of a number of different companies. This is a really, really interesting time for entrepreneurs, because it's tested areas that have never been tested before.
Yes.
We're in times that have never been seen before. Well, certainly not for 100 years in terms of business, and certainly not the shutdown that we've seen at any sort of stage in peacetime, as we've spoken about. You looking at that and having the sort of benefit, the privilege of being able to see so many different people who are working in that sort of thing. Talk to me about some of the I guess the traits that you see as making people successful in industries, and I guess that goes for the businesses that you're funding as well, working with a number of SME entrepreneurs as well. And then the sort of consistent patterns that you're looking at when you're seeing and speaking to entrepreneurs in the marketplace.
Yeah, and I think the point you raise, particularly in the context of COVID, is really interesting, and maybe accentuates the characteristics you're looking for in entrepreneurs, particularly those that are successful. One of the companies I'm chairman of, I think we've 700 odd employees around the world, and when COVID hit, it was a global pandemic. So we have employees in India, in Serbia, in Romania, in the US, in the UK, in Ireland. And actually what was really interesting, rightly, how these entrepreneurs moved to protect all of their staff with the same level of consistency, irrespective of their location, same level of passion, the same level of authenticity that, looking after staff is very important. And building that emphasis and that culture and that consistency is part of what I see in really successful companies. It's something we try to do here in Accelerated Payments. Every company has these value statements that they have, and frankly, a lot of companies just they ad lib value statement. When we did ours, and we did it at the start in the first month of trading, we said, okay, what is it that we stand for? What is it that who are we? And the 3 words we came up with was authentic, collaboration, and passion. And if you look across successful businesses, I think those 3 words, they're not the only 3 words, obviously, but you do get a high degree of consistency in terms of those characteristics being within those companies and being central within the entrepreneurs that are driving those companies. And I think COVID has tested that. As to how, and in fairness, most companies have done the right thing and looked after their staff, and also looked after their clients and their customers, because obviously, again, this pandemic's been global in impact, and I think that's created opportunities. Again, as these crises always do, I think work patterns are going to change. So work patterns that were going to happen anyway over the 5 or 10 year period have literally happened overnight. We went.
Do you think they would have done? Do you think they would?
Yes.
You mentioned
Toby. Yeah, I think they would, and I think because they just make sense.
Yeah.
One of the communities I see is women who are coming back to work having had a child or two children. They have home commitments. They want to work 4 to 6 hours. These are talented, professional, bright people who don't want to do a 2-hour commute into London or Dublin or New York or wherever. It doesn't matter. And yet who you can trust all day long, who will get the job done. They'll probably do 5 hours work in 4 hours. And you see, again, what we're seeing in our workforce in accelerated payments, it's not a huge workforce, but 30 odd people. But you can see patterns where people who would have come into the office all of the time in the future will work 3 days a week from home, maybe 4 days a week from home, and then 1 or 2 days in the office. Because there are pieces that are really important that you need the face-to-face for, in terms of maintaining the culture of a business, in terms of driving ideas, creating cooperation and teamwork. Face-to-face are hard to beat, but I think those trends have been significantly accelerated, and we will end up with a hybrid model where it won't be one solution for everybody. It will be very individual. They'll do 5 days a week in the office because that suits them. It suits me, for example. My wife and gorgeous daughters are very happy to see me go every morning. Frees up the house for them. And yet for other people, I can see them doing 5 days a week from home and maybe coming into the office once or twice a month because they've been working with the business for a number of years. They know exactly what they want to do. Their productivity is very measurable. And that's another really interesting area. In some ways, office work, the measuring of productivity was very one-dimensional because you measured it by had Toby come into the office at a reasonable hour and did he leave at a reasonable hour. It didn't necessarily mean he wasn't looking at social media all day. So people assess productivity by the clock almost.
Presenteeism, yeah.
Yeah, and I think we've got to get a bit more sophisticated on that and say, actually, you know what, that's not good enough for the world. If somebody does, really good work from home on a remote basis, then we should be able to assess whether they've been productive or not. And I think that's going to drive those habits of saying, okay, so what is satisfaction here? What is success from productivity? And if people are meeting those levels of productivity, then why would you not accommodate remote working? And then again, it suits socially a significant cohort of the population.
Yeah, absolutely. Yeah, that productivity aspect has really been shown into play. Look, unashamedly, I think for 20 years I've been a 5-day in the office kind of guy who, and you look at people who are working from home and think, and your natural inclination, I think, is to think, right, okay, that's probably a less productive day from it. But over the course of the last year, it was growing in my head that this is actually a good thing. And I still was here every day. And then over the course of this year, I think it's leaving a lasting legacy where, when we had the sort of hybrid split, particularly through the sort of summer months of, August, September, we were doing some record performances with that ability for people to go in, recharge and have that sort of balance and perform at their absolute best. The results and work was absolutely extraordinary over that period and great to see. And I think that's something which is testament to everything you're talking about there.
Yeah,
I want to touch back on this this entrepreneurial portfolio of what you're looking at when you see the common traits of the best people. So you talked there about authenticity, about passion, about collaboration. If you were to put the ingredients of I think back in the magazines where they try and build the perfect rugby player with Johnny Wilkinson's left foot and Dan Carter's brain or whatever it might be, if we're building that sort of model of an entrepreneur and saying these are the various parts of it that would make that ideal performer, what are some of those traits that you've seen consistently again, which I'm sure authenticity is around that, and the collaboration and passion are there. If you're going to say, right, you're looking to invest or to to hire and onboard a CEO for one of those portfolio businesses,
Mm-hmm.
what would that look like, and what are some of the core things that you think are absolutely bulletproof for success?
Yeah, I think so. Two or three characteristics that I would see that are really important. One is to be a good listener, because I think listening to customers, listening to stakeholders, listening to employees is really, really important. I think, again, having been involved in a lot of startups, most startups pivot in the first 6 to 12 months because, as they're engaging with customers and listening, if they're listening well, they end up changing or evolving their offer, whatever product or services, significantly in that first 12 months. And it's always a source of great amusement when I get these, business plans that are 60 pages deep on day one, where actually, if it's longer than 5 pages, because the answer is you just don't know until you engage with customers. So I think having been an acute listener is actually very important and undervalued, probably. I think the second piece is to understand what's the difference between a product or service that is a nice to have versus a need to have. And it sounds subtle, but actually I think it has a massive impact, because in so many businesses I see that don't work, they have a product in the nice to have category. And again, during COVID, for people, many companies have grown their business, and actually we've supported them from a funding perspective, because they've been quick at recognizing the opportunity in terms of a need to have, and moved or pivoted to that. And then you see other companies that haven't done that, and unfortunately, because of things they couldn't have anticipated with COVID, they've ended up having a very negative or tough year. So I think that's the second piece, is recognizing what's a nice to have, what's a need to have.
Absolutely agree with that.
And then the third piece is just execution. So what are we providing to the client, under promising, over delivering? Again, it sounds simple, but it's again, invariably the guys that don't get it right, it just has such an impact on the business. And so again, that focus, that drive to say, we are going to set out and achieve what we said we were going to achieve, and a focus and an energy that actually, again, if it's created with the right culture, is really positive. People work longer, they work harder. They don't have to be asked to do that. It's just part of the culture of the business. And then ultimately, it's very important to recognize that and reward that and reflect it. It doesn't always have to be financial. It surprises me still how often people forget to say just thank you. You did a great job. Well done. It's strange that aspect isn't as prevalent as it should be. But there are three things that I would particularly look for, particularly in a business that's in the first 3 or 5 years of its life.
It's very interesting. There's a book by Jack Welch, the great Jack Welch, who and it's called the 3 E's of leadership. Yeah. And he talks about the ability to, or fundamentally, he sees it's a very similar sort of thing to you, that energy is important. So someone there who leads from the front and sets the pace. The leader sets the pace of the team. Yeah. He then talks about energizing. So someone who's an energizer. Yeah. So puts that, and as you were talking about there, creates the sort of mood and the ability for people to want to do more. And then execution is one of his, the mainstay chapter of that particular book. The ability to get things done, get shit done, for want of a better expression, is a fundamental trait that I think is often overlooked. So I think if you're putting that melting pot together to have, and particularly. And this is a trait that I see across the fintech space in particular. Loads and loads of nice to have businesses, without sort of saying, look, actually this is something here. The ones that really saw are saying, you've got this problem here, and this is causing you this. It's the heaven and hell scenario. Is either it's going to help you get to here, or it's painful enough that you need to fix this, and we can sort this out and take you on that journey. And that to me is an absolutely common trait of all this. Ian, I could be talking about this. This is one of my favorite subjects, and I could be talking about it for hours. So this could be a very, very long show. But so I'm gonna hold myself back, and maybe we have one separately, which is a whole nother piece around entrepreneurialism and leadership, which is a big passion of mine. But I want to talk and about accelerated payments and what's coming up next year. We go into 2021. You're talking there about opportunities in the marketplace. Tell us a little bit about who you can be helping at the moment, what we can expect to see and hear as we enter the new year, for you guys, and how people can get in touch with you. 3 questions in one there for you to catch.
Yeah, so we are gearing up for an expansion year next year. Our business, because we're in the business of working capital, is directly reflected to the economy. So we showed a dip in Q2 and Q3 as the economy tightened. We're now seeing that coming back, and again, we're starting to see some roll off on interventions by government to be put in place. So we've gone to the market and raised additional capital, both equity and debt. Our model proved very robust through the COVID recession, which is good. We, with little or no impairment in our model, so we were able to transfer risk from the small business over to the buyer successfully, and we've processed now about €250 million worth of invoices. So we do see significant opportunities in the markets we operate, which is Ireland, UK, US, and Canada. The companies, particularly Q1 and Q2, are going to seek to expand again. We think that the banks are going to be struggling to facilitate that existing relationships. So there's going to be opportunity for the alternative providers such as ourselves. And again, we are recruiting in all 4 markets on the basis that we're confident that this expansion is going to happen. And I think we're seeing that in a number of our peer companies as well. So I think, again, COVID has accelerated so many aspects of the economy and society, either positively or negatively. And I think from a SME funding perspective, I think it is going to accelerate the alternative funding community in terms of being able to provide flexible solutions on a timely and cost-effective basis. So we think we're going to grow our book, 100-150% next year.
Wow.
Based on the pipeline that's coming through to us. We have to be able to handle cross-border, so that's vital. So we've got to be able to work in the 4 core currencies: sterling, euro, US dollar, Canadian dollar, and again, that's all set up. So really, 2020 has allowed us to create a very strong framework that we can expand the business on with a high degree of confidence. And that's obviously very important for all our various stakeholders, funders, senior debt providers, etc. And again, we've also spent a lot of this year working out how to connect to the SME sector, how to get in front of the companies that need our type of funding. And again, we've good partnership models in place for 2021 with banks. With our banks who would appear to be our competitors, but actually I think are long-term partners, again in all 4 jurisdictions. So we're very bullish about 2021 and 2022. I think what we need to be is just patient Q1, because I think Q1 is probably going to be a continuation of Q4 this year, and we need to be careful just to pace ourselves, not to be too over anxious for things to normalize. But I do think that by the summer we'll have got there.
Yeah, I think you're absolutely right on that. Like Q1, I think is a time where people will be positioning themselves, and that's an important aspect. I think that there's an element of patience, which I absolutely agree with, but there's also that need to make sure that you are. No one wants to be chasing. Yes. By the same rationale, and if people get too far behind, that sort of catch up can be very difficult. And, that's certainly the message that we're trying to sort of advise and consult on at the moment. That there's a need there to there's some excellent opportunities, particularly when you talk there about growth and personnel and such like. It's this time of year, as we sort of lurch towards Christmas, is a very good time for companies to position themselves and get that sort of access to talent that will be a bun fight, because I honestly think there will be a potentially Brexit orientated as well. There's going to be significant pressure on people to hire the talent that isn't going to be seen by X amount of other people at the same sort of stage and have clearer runs.
Yeah, I agree completely.
So Ian, how do people get in touch with you? If people like what they've heard so far, what's the best way for them to contact you?
So, like any company these days, we have a website, Accelerated Payments, and we're open for business. If you're looking for funding, typically we're up to $500,000 or $1 million US dollars, sterling, euros, and you have very good clients from a credit perspective. But as a company, you're expanding, or maybe not as capitalized as strongly as you could be, or maybe you've had a tough 10 or 12 months. Then get in touch. That's the business we love, and and we can make a decision quickly, usually within 48 hours, and then we can get you funded within another 72 hours. So what we try to be is faster, cheaper, and more efficient. And then what's good is we're creating relationships that tend to be sticky and long term and allow companies to grow with far less equity capital than they might otherwise need.
You've spoken there about the ingredients of many a good business, so I'm convinced it will do well if you can increase that efficiency and do it at a decent price. It's never a bad strategy to go in with, is it? Ian, it's been an absolute pleasure. Oh, sorry, carry on.
I was going to say, well, I mean, it's really interesting in the working capital cycle. 15 days can make a huge difference, or 7 days. Like if you have to make salary on the 28th of November and you're not getting paid till the 5th of the next month, that 7 days is vital, and that's what invoice financing does. I mean, obviously we can do 60 or 90 days, that's not an issue, but it's simple things like that can make a material difference in working capital. I think that flexibility is going to become part of the market, whether it's Accelerated Payments or somebody else, and it can just help. It can help, and you can rely on it being there next month or next year or whatever.
Yeah, absolutely.
Sorry, I cut across you, but it's always
not at all. I'd love to.
7 days. You think 7 days isn't much, and actually it's an eternity for a small business.
Yeah, well, it's just the speed of doing that, isn't it? It can be a challenge, which I absolutely appreciate. Ian, look, it's been an absolute pleasure having you on the show. Thanks so much for sparing the time and that insight and wisdom with us today. It's been a real joy. Thank you so much.
Thanks, Toby. I really enjoyed it chatting to you, and well done on all the success of your shows to date. It's good stuff.
Been good fun. They've been good fun to do. Well, listen, it's reached new heights with having you on the show, and we really appreciate it. And thank you all for watching. We hope you've enjoyed it, and we'll see you soon on another episode of Fintech Focus TV. Thanks a lot.